All right, good. Hey, good morning, everybody. Comment allez-vous? I think it's a Wednesday, what, the 25th or 24th? 25th. Yeah, Wednesday, July 25th, 2018. This is your daily Forex trading strategy session brought to you by TradersWay. Namaste. Thank you very much for being a client. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. I'm here to be your guide. I want to teach you how to make trade plans. Without trade plans, you're reactionary, and you will lack consistency, you'll lack control, and I don't think you'll ever be able to build confidence. So it all comes down to your trade plan. Do these sessions Monday through Friday, 7:30 in the morning. That's a couple of hours before the U.S. stock market ends. It's approximately London. So thank you for being a part of our community. If you're new to these sessions, I'm trying to earn your loyalty and respect. And you show that by opening an account at TradersWay. So please visit TradersWay.com and start with the demo. Go from there. So I am now at day 3 of being sick. But like I tell my children, nobody gives a damn. So you still have to get up and do your job. Try not to complain too much. So I will complain no more. All right. So let us be going. We'll just start where we left off. This is starting with the yens here. And then we can go back to the majors, and then we'll call that a day. Yeah, it's harsh, right? It's true. Right? There's nothing more of a waste of time than complaining, because no one cares about your complaints. They don't. They care about themselves. Yeah, it's really red. I can't do anything about it. I changed the lighting and all that kind of stuff. It's really weird, right? It's just struggling. Oh, look, it just changed. Yeah, so anyways. Yeah, so I don't know what it is. Yeah, Joe says squeaky wheel gets the grease. Yeah, but they're not doing it for you. They're doing it for themselves because they want you to shut up. You're bothering them. All right, let's go here. Talk about maybe potentially a channel forming. That's cool. Looks like there might be. Give it a couple clicks in. It's not really a good area to buy, but it's trying to do its thing. You know, I guess I should use a drawing tool. Let's make it bleh. Bleh. Okay. So you have lower lows and lower highs. Okay. And then is it a change of direction? We don't really know. It's not a great entry. I mean, for a bull, if you look at this, it's not a great setup for the week. If anything, it's a neutral, which means, you know, you might be able to get it up here over time, but it's already Wednesday, right? So even that seems pretty doubtful. But the potential is there. It's a little risky for bears because it's certainly not bearish. It's a little bit bullish. Okay, unless you go higher time frame than 4 hours. Because what you might find on a daily, for example, and this is for you to do in your own analysis, that you might find on a daily chart that this is kind of like this. Okay, and the higher time frame will have its own fib. Okay. You see what I mean? That's the fractal nature, fractal geometry. Now, I'm not really hoping to see that, but the yen could stay strong for another month before weakening. So it certainly could do something like this. Okay. Oops. Okay. This is more bearish than the pound yen was. So let me get rid of some of this. Oops. This is from a previous conversation a day or two ago. Okay. It's a little more bearish because it still hasn't made a high higher than this. So let's use black and just say we've been caught up in this area for a while, right? So it's not incredibly bearish. I mean, if it was incredibly bearish, we would have already hit our target. But if you were a bear, you would probably try to do this today, wouldn't you? What do you think? No, John, it just has more to do with Japan being a very wealthy country that has had incredibly low interest rates for a generation, maybe longer than a generation, John. And so with that, how do you save for your retirement when your government bonds pay less than inflation? What that means is if you saved your money to retire, you're guaranteed to lose purchasing power. Guaranteed to lose. It doesn't seem like a very exciting opportunity, right? For your long-term investment, you're like, oh, well, I'm guaranteed to lose money. Sign me up. So Japanese investors need to invest somewhere else. Yes, sort of. It's not really the aging population, John. It's the interest rate they receive for their saving for their retirement. Okay? So they invest their retirement savings in other countries. So what happens? Well, they sell their yen and buy something else with it. Okay, that's a big part of my analysis. Well, no, John, if the Japanese population had what how do you say it? What they want is to earn income at a higher rate than inflation. Nobody really cares where they got it. If they could get 4 or 5% return on a Japanese government bond, investing it for 30 years in their own country, they'd be super happy. That's what they would want. To say, all right, government of Japan, we, the Japanese people, give you our retirement for the next 20 or 30 years and we'll live off the income you pay us. That's what they want, but they can't get that. What does the 30-year Japanese government bond, JGB, what does the 30-year Japanese government bond pay? The JGB doesn't pay anything. Yeah. So once again, John, I will guarantee you to lose money. How much would you like to invest? Yeah. So you go put your money somewhere else. That is the story. Okay. You're welcome. All right. Cool, right? So anyways, if you were a bear, even if you're not a bear, right? But if you were a bear, would you try to sell there? And if you're a bull, would you assume a bear would try to sell there? All of that is what matters in this trade. Oh, I appreciate you, John. All right. Cool, right, guys? Hey, Juan. Hello, right? Hello. Bears should assume selling. Bulls should assume selling. One of the things it does is if you're a bull, you don't buy now, right? So what if you were a bear? Or what if you're a bull, but you don't want to buy now? Could you drop into a 50-minute chart and sell for a couple of hours even though you're a bull? I call that short-term short, but long-term long. So even as a bull could sell it for a couple of hours and then buy it off here. Okay? Yeah. But the point is you're thinking of things. You're looking at this. You're like, well, I'd buy it, but not here. Where would I buy it? Well, if it came double down and then double bottom at S1, I'd buy it. I'm not saying you should, guys. I'm saying if you're a bull, that would be one thing you'd look for. Or what if it fell down here? Yeah, you'd probably take that shot too. What's another scenario? What if it did this? Yeah, that might be one. Okay. Would you buy it sort of in this area? No. Would you buy it up in here? No. Okay. Here's the trick one. Would you buy it here? No. Same price. Okay. Would you buy it here? No. Okay. So that leaves you in your analysis as a bull. You might buy it here. You might buy it here. You might buy it here. So now you know where you might buy it as a bull, and you know where you won't buy it as a bull. Now, what about bears? It's reverse logic. You would sell it here. You would sell it here. You would sell it here. And you would sell it here. That's why a bull would never buy there, because what you're going to do before you decided to do it. Right? Oh, I missed one as well. This. Right? Ah, that was supposed to be blue. Come on, you stupid drawing tool. Oh, hang on. Relax. Oops. Here's another place. That would probably be a sell. Ah, you stop it. Stop it. Looks like I have to quadruple click everything this morning. So anyways, there you go, right? John says easy to get caught in an economic calendar surprise. Okay, well then trade differently. Okay. Peter says, Wayne, you only trade 4 hour. Well, it's not that I trade the 4 hour. It's that I start on a higher time frame first. So I know if it falls on the 4 hour, it'll probably fall the rest of the day. Well, that's probably important, right? Oh, I just said change the way you trade so that that doesn't bother you anymore. Because that's volatility, right? So once again, volatility is more short term than long term because the trend usually prevails. The long term fundamentals, macroeconomics prevails over a news release. Trump sends out a tweet that goes, woo, woo, woo. Yeah, well, it does that on a 1 minute or a 15-minute chart. But, okay, these moves here, right? What I'm trying to teach you is these moves here are all predictable ahead of time. Yes, there's volatility in between, but when you started your analysis last week, this was predictable it would fall because it's a triple top at resistance. It's also the exact pivot you'd want it to fall on. So fall it did. Great. This down move was predictable. Now, how fast it and how far is unpredictable, but you just start, here's a place where it would fall. Then it fell. So then you'd say, well, it's going to retrace. It's going to do a Fibonacci retracement from here to here. And then you can look left and you're like, well, there's some problems here and here and here and here and here. So this is pretty predictable. Predictable what? Well, that this would go up and then fall. Okay, again, how far? We don't know. How fast? We don't know. But the idea is eventually it should fall. And icing on the cake, this is the pivot area on the new week that it should fall at. And the target based on that would be down here. Okay, so anyways, it fell. So now, once it finds some support, you would expect it to retrace. How far back? Well, a fib of this area to this area would be great. And you look left, and this old support could become resistance. And maybe this, this moving average cluster could be important. If so, we're at the line in the sand again, and then this should fall. Where should it fall? In here, because that's what we predicted 4 days ago. You might have actually had that predicted last week during this retracement. Wayne, banks use pivot points? I don't know. Okay. Okay. I don't know if banks use pivot points. I used to subscribe to a service that let me see trade entries on banks. Most of the banks are very poor at trading. Morgan Stanley purely guessed, and I don't think they even had a chart when they made their trades. And then Credit Suisse was just bad. They probably need to use pivot points. They were just bad. Like, if Credit Suisse sold, you should probably buy. And if Credit Suisse bought, you should probably sell. They were that bad. So one of the things that I've told people over the years is, these banks, they need you. I've seen it. They need you. You're a better trader than their trading team. So this could be part of your career path. Couldn't you or shouldn't you walk into a job interview at a bank on a trading desk and say, this is the last 3 years of my trading track record. I specifically focused on selling USD CAD. I had such and such a return, which was fine. It all matched, the beta, right? So if you look through it, my returns are a function of the beta, not returns a function of risk. And during that 3-year period, I had a very low drawdown and very little volatility. And what would they do? Oh, that's not what we're looking for here at the bank. Of course, dude. You're going to be driving your purple Lamborghini, and your cufflinks are going to be the same purple. They're going to match your Lambo. That's what you want, man. So I'm just saying, you know, these mystical bank traders and hedge fund traders, a lot of them are terrible. You're the next generation. Think about it this way. I've been trading retail Forex since the very beginning. That definition is like 15 years. Nah, I got sick of the yellow Lambo. So you're in a new industry. You could be or should be the next generation that makes this industry great. You got in at the ground floor. No, you were not in it when it was wild and crazy. When I first started, professional traders that I knew, they're not traders, they're investors, but professional investors managing hundreds of millions of dollars laughed in my face because I was a Forex trader. And it was just, in their mind, just stupid. What a sort of like the way people look at Bitcoin traders and stuff. They're like, oh, yeah, things change, bro. Things change. But anyways, this is, you know, right? You're getting in when the market is now matured and earned respect. Okay. And by the way, guys, don't get caught up on the pivots like, okay, so that's the thing that's going to make the difference. Well, it'll make a difference, but there are even more important things on here, like simple things like price action, which you really need is patience and discipline. Because if you don't do your long-term analysis, if you don't understand macroeconomics, if you don't have a bias, you're going to suck with pivot points. Okay? I can't tell you how many times, thousands of times it seems like, when someone says, Wayne, I'm really good at technical analysis, but I'm struggling with my trading, and I say, all right, send me your track record. No, I don't have a track record. Send me your trade journal. I don't have a trade. Well, what are your strengths and weaknesses? Well, I don't know my strengths and weaknesses. Like, well, I just uncovered why you suck. You don't know what the hell you're doing. And worst thing is, you think you're really good at technical analysis. I bet you if I looked at it, you're probably not that good at technical analysis, right? All of a sudden, like, the whole world starts crumbling. I'm like, well, let's just start on your bias. What do you want to do in this pair? Well, I was thinking about doing this, but then I was thinking about doing that. I'm like, oh my God, you don't even have a bias, right? So I think it's those things that are going to carry you. You could trade this CAD yen. If you told me, Wayne, over the next 6 months, I'm only going to buy CAD yen. Even without pivot points, even without moving averages, even without oscillators, I think you will be a successful trader. You understand? Like, that's where we need to get you. Because, right? Because then you know that you're looking for opportunities to buy. And you'd look at this and you're like, excuse me. You're like, well, this is shallowing, so this might be an opportunity, but not today. I probably won't get an opportunity to buy it today. That's useful information if you're a bull, right? That's your likely next opportunity, but that's not likely to happen in my opinion. Okay, but that would be the soonest. The next one would be a scenario like this. That's like that could probably set you up for a trade tomorrow. Or this, I think, would even be better. That would also be about tomorrow, most likely. Yeah, well, thanks, John. Yeah, and that's fine too. Oops. Okay. So, anyways, I'm just trying to point out it's not the indicators that are making the difference. You make the difference. Okay. Someone's going to invest $1 million into you, not your silly charts. Okay. That's what a bull is going to look for, but you got to draw it into the smaller time frame. Stupid drawing tool. Okay, but there's a lot going on here against the bull. Seems a lot like the other yen pair I just analyzed for you. Seems like this could be technically important. That could be strategically important. What do we know? Okay. Do you consider this a double top? Okay. Was it predictable? Meaning, just because it does this is not important. Knowing ahead of time that it's probably going to do, or even just could do something like this, is the important part. So, is there a predictable level of resistance that would have made you assume something like that could possibly happen? And it's not, okay? Yeah, and it's the pivots again, right? This is where you would assume that. That's why this red zone is there. It tells you, hey, guess what? It's probably going to top out here. Oh, look, it topped out here. Great, very predictable. Okay, so is this a lower low? Yeah. So look left, drag this across. This is your new sell zone. Retraces, falls again. Okay. So it's probably going to do something close to that. Okay. The important part here is we have not made a higher high. Okay. So until it makes a higher high, you have to stay bearish. A higher high should be at least this, but even more like that. Because it could still come up here and then consolidate, right? So we're a long ways from saying this is bullish. So you kind of have to stay bearish. Okay. It's not a great bearish setup. Yeah, it's sluggish, folks show, but as long as you're not, betting your mortgage on a long position, right? It doesn't look very bullish. You see where we opened? What are you supposed to do there? What is it that I teach in that situation? No. Well, I see what you're saying. Well, not because it gapped down, though. Okay, Daniel? So that gap down is critically important, especially after a double top and a significant bearish engulfing drop. Okay, so the week closed low. It didn't close high, for example. It's not a gap trade. It doesn't say sell per se. It's something very specific. Only people in the swing trading course should know this. It's something very specific. It's not sell, like sell how, sell where. Greg says, wait for the M3. Yeah, but again, you're buying. Yeah, so the M3 is correct in an uptrend, right? But again, a double top and a very significant bearish, that ends the week low. Look, the week started here, went up, and then collapsed, and ended low. So right? It's not likely to be bullish in the coming week. Thank you, Charles. Finally got it. Thank you, Chuck. This situation, okay, you're out of position is the language that I use, and you sell at the 21. Right? So anyone that's gone through the swing trading course has heard me say that probably 100 times. You're out of position, sell the 21. 4-hour 21. Not the 1-hour 21, not the 15, not the daily 21. Right? Literally 100 times. Well, again, take the course, bro. All right. This one's a crazy one, huh? Crazy. Look at that. Crazy. Monthly R3, though. No, but look, there's 21 hours of training or something. It's not easily explained in a few minutes. But I've made it available. I mean, that's why I did it. So it's there. Yeah, this one's difficult for me, but as you know, I generally don't trade the USD yen. But things that we can comment about, we're at a support pivot, so it's not a great place to sell. You're at the 4-hour 200 EMA, which is the neutral zone. So I don't know if the market is still bullish or bearish. It's at fair market value. To me, I look at this and it's kind of untradeable. I might set it up. If it was Friday, I might look to buy it. It's not even Thursday. It's Wednesday, right? So maybe somewhere soon. It'd be interesting. It's a bit of a hope and a prayer, what we call a Hail Mary. Yeah, if it was Thursday or Friday, I might buy this with the hope of it going up. But the problem is I don't want the dollar to go up. So I get right back to where I was. I don't want to trade that. See, I want both the dollar and the yen to be weak. You're the best thing about me. So anyways, let's get off these yens. They're all the same. La 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 la. Uh 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 uh. Hey Richard, in a few weeks, I'm planning on doing a 5-hour training course for all live account holders at TradersWay.com. You might want to start there, open up your live account, put some money in it. Then in a couple of weeks, get that training for free. And then if you like the way I teach, then maybe consider a course or something. If you're new, that would probably be the best thing. Yeah, $500 in a trading account is more digestible than paying me 1,000 or something. All right, big dog. Did we talk about something like this? I think we did, didn't we? Right? Did we set something up like this? Anybody? The way I recall it is we were up here on Monday and we set this up, oops, as a role reversal, a hammock scenario. And I think what we said was this or this. Well, remember, John, I don't have an opinion. So he might say, oh, well, I heard of this Brexit thing, so I have to sell it. I don't know what's going through that guy's head. I can just tell you technically it's not going to do that now. Oh, even worse. So that might be fine, but like, isn't it like elementary that in a situation like this, it's going to stop falling? Oh, right on, Alan. Appreciate that. Oh, right on, Alan. Appreciate you moving your account to TradersWay. That's cool. Yeah, John says, yeah, right, the hammock. We had that whole conversation about it, right? Yeah. So I'm not saying this pound dollar is going to go up forever. I just know it's not going to fall here. So, yeah. Trying to get this out onto the, remember? Yeah. You remember going all the way back here? We had this plus the monthly pivot plus the weekly pivot. Remember that? We had price action support, monthly support, weekly support. Like, why would it fall any further? We know the bears are going to profit. You can still be a bear, but okay. Just have a trade plan. You know, so really, like, where would you be a bear on this? I mean, to me, it feels like we're in this big move like this. That's what it kind of feels like. So, like, if you were a bear and that's what you thought, see, this is important to go through the process, right? No, I would never sell that there. I mean, well, no, like maybe here, maybe this was it. But even then, I think we talked about it. It's going to double bottom. I think we talked about that. Oops. So now I got to put this back. Oops, I deleted it. All right. So if this was your thought process, okay, where's the best place to sell as a bear if this is your thought process? If you've analyzed the market as sideways, yeah, at the top, wherever you see the top meeting, you might change it and say, well, based on your analysis, you see this is the top. All right, cool. I'm good with that. As long as you have the analysis, right? Great. So that is 133. Where's the next one? Oh, 130. 130. Someone said 132. Yeah. Yeah, it's just not that great. Mm-hmm. 132.50 maybe. So what I'm thinking as I'm looking at this, I'm thinking more like maybe I'll give you 132.50 to 132. Okay. And we'll treat, but only as a situation in which price moves up and then moves down and then moves up. And all it is a tightened consolidation. But 133 would be the best. Um, you know, now we could change this to a daily. See, if it was going to fall, it should have fallen off of that. We're kind of there now on a daily. All right, which means you have to be very gung-ho on this. So, yeah, I'll give you 132. If you're very bearish, and of course there's plenty of opportunity for people to be very bearish, but make sure you are very bearish. Sure. All right. So now what you do is you start creating, you start looking for patterns on a smaller time frame, even a 15-minute chart here. what would you need? Well, something like that would be more interesting, right? Or even better, something like that. And then manage the risk. Okay? So now you're looking on a 15-minute chart for a selling opportunity off of resistance based on your analysis of the daily. And the daily shows you up around here. I guess I should do it this way. Somewhere up here. Come on, drawing tool. Somewhere up here is the daily 21. Okay? Yeah. So therefore you need to make decisions, but it's moved sideways for 12 hours. So you need to figure out what you want your trigger to be. You need to know what you're looking for. Otherwise, when you're hungry, you'll buy anything, right? Barry says I don't like sideways. Yeah, so that's kind of what I said. You either want it to pop up and then drop it off of the 132, or you want it to make a lower high scenario. Okay. Okay. Create a technical trade plan, right? You're the best thing about me. All right, this was last week. We talked about this, the fade and the rally. So we had it either here or here, going up. Cool. Well, one of them worked. Plan A, plan B. I haven't been sleeping well. Coffee. Coffee. Doctors? No, I'm Canadian. I don't need to go to no doctor. Exactly. Yeah, in America, like, oh my God, I have a cough. I need to go see my doctor. I need to be on penicillin. I need to be on. All right. So, anyways, why don't we leave it at that? I'm burnt. I'll upload this to YouTube for you. So once again, thank you for being a client to Traders Way. Thank you for the loyalty and respect you show me every day. Thank you for all the energy you put into this gig. It's worth it, guys. It's really worth it. So peace on earth. May the pips be with you. May our profits be above average. I will see you tomorrow. Yeah. Peace on earth. May the pips be with you. May your profits be above average. Cheers.